Hello everyone, welcome to my lecture on Unit 4 Topic 1, Introduction to Accounting. The contents that will be covered in this particular unit will be, Unit 4 will be meaning and definition of accounting, accounting principles, double entry bookkeeping system, journal, ledger, trial balance, preparation of financial statements, that is trading account, profit and loss account, balance sheet, adjustments and simple problems. Introduction to accounting. The main objective of every business is making profits. Thereby, the businessman invests capital and acquires various properties and assets to generate revenue. That is the general phenomena. So, in the course of conducting his business of buying and selling goods, he incurs various expenses and receives income from different sources in dealing with several people. It is impossible to memorize and recollect that such large number of business transactions at the same time. The businessman will be interested in knowing at the end of the year what he owns and what he owes, how much profit he has incurred or earned, and what his financial position is. So, they are forced to make record of their transactions related to his income, expenditures, assets and liabilities. So the process of collecting, recording, classifying and summarizing financial data is known as accounting. So definition of accounting. Coming to definition of accounting. Accounting is a language of business. The main objectives of accounting is to safeguard the interest of the business, its proprietors and others connected with the business transactions. So according to American Institute of Certified Public Accountant, defines accounting as an art of recording, the first one, second classifying, and third summarizing in a significant manner and in terms of money and events which are in part at least of a financial character and interpreting the results thereof. So the basic functions of this accounting is nothing but recording, classifying, summarizing, or the components of accounting will recording, classifying, summarizing and interpreting of results. So the art of recording involves writing the financial transactions immediately after they occur in the accounting books. Here the list of accounting books such as cash book, purchase books, sales book, etc. Similarly, the art of classifying involves a classification of such data under the various heads of accounts such as sales, purchases, salaries, assets, etc. And the art of summarizing is a significant manner is to present classified data in such a way that they are useful for the business both internally and externally. So they can be so that they can take an appropriate decisions. So appropriate decisions will be on the as a part of interpreting. To take decisions regarding the investments, to ascertain the tax liability, to assess the progress of the firm, and to decide its market share, and to speak about or to assess the to identify the further prospects of expansion of the business. So the importance of accounting is to maintain its own records, monitor the business activities, calculate profit and loss for a given period of time, fulfill legal obligations, show financial position of the firm as on a particular as on a given date, communicate the information to the interested parties or the stakeholders. Now users of this accounting, next concept is users of accounting or the stakeholders. It can be owners, creditors, managers, government or tax authorities, employees, consumers, and research scholars. So everybody interest will be different from their perspective or from their point of view. So owners need this accounting information to assess the profits and to see or visualize the performance, or to see the performance of the, to measure the performance of the business. Creditors or financial institutions can be supplier of goods on credit and lenders of money by any private financial institutions or public financial institutions. Managers need this accounting information to update it to his higher authorities to see how their decisions are effective. Government and tax authorities will have a close watch on the firm's financial performances to assess the tax liability of the firm based on its net profit for a particular period of time. Net profit for the particular period of time. And employees need this accounting information to put forth their claims for the better wages, for better facilities, job security, etc. Consumers look forward for this accounting information because they are interested in getting goods and services at the lesser prices. So a good, the perception is, a good accounting control will always leads to less cost of production, or effective financial control or maintenance of accounting. A good accounting system leads to less cost of production, thereby giving rise to less prices. Next one is research and scholars. Accounting information is considered as a mirror of a financial performance of any business organization. So this research scholars need a detailed accounting information to conduct a study into the financial operations of the firm with respect to purchases, sales, assets, liabilities and expenditures, shareholders' funds, etc., which will be available in the accounting information maintained by the firm. Now next, coming to branches of accounting. Branches accounting was classified into three different things, that is three different: management accounting, financial accounting and cost accounting. Financial accounting, the basic purpose of financial accounting is to prepare the financial statements, that is trading and profit and loss account, income statement and balance sheet. The trading profit and loss account shows the net profit made or the net loss incurred by the firm for at the end of a given period. The balance sheet reveals the financial position of the firm, of its assets and liabilities as on given date. The tools and techniques used for the purpose of preparing financial accounting includes subsidiary books, ledger accounts, trial balance and financial statements. Cost accounting. The purpose of cost accounting is to ascertain and control the cost of a product or a department. This aspect is completely ignored in the financial accounting system, going into the detailed and minute cost that is invested or that is incurred in producing a single unit of a product or a service. So that is what is taken care in a cost accounting. Its main focus is to find out the cost of the product or a service and is more used for internal cost purpose to exercise control over that. Wherever there is a possibility of reducing the cost, they will do all the relevant measures they will take in order to keep the cost in control. The tools and techniques of cost accounting includes opportunity cost, marginal costing, and break-even analysis. Next one is management accounting. Next branch of accounting is management accounting. The purpose of management accounting is to assist the management in taking appropriate decisions. The necessary accounting information is provided by the accountant to enable the top management to take timely decisions pertaining to its operations. The users of management accounting are essentially internal to the organization, because it acts as a operating guide. This management accounting acts as an operating guide for the management to take an appropriate decisions which is required for its internal purpose. The tools and techniques of management accounting includes ratio analysis, capital budgeting, and so on. So these are all the relevant, the basic fundamental introduction to the concept called as accounting. With this, I'll end up the session here. Thank you.